On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray De Niro, and we were just not busy enough at work for me to get this recording in. So welcome back for another episode of Crypto Portfolio Updates. Trying to get back on schedule now. It's really hard. You have a couple of busy weeks coming home, passing out. I work. I'm a blue collar worker. I'd say half the time. And that half the time, I am exhausted when I get home. It is, you know, it's construction. So it's half construction, half IT. Some days you come home dirty, and the dirty days, I'm normally both mentally and physically taxed, especially considering where I work. So actually, you could throw spiritually taxed in there. It's a thing. So today we're back on schedule. So we're going to do the update and do what we do. So let's go ahead and jump right into it. Don't forget to like, share, and subscribe. Do all the things. Hype the video if you're on mobile. I'm going to go ahead and micro machine myself, and let's go ahead and jump right into the data. As we sit right now, Bitcoin has reclaimed $68,179.70. We've reclaimed $68,000. That's pretty awesome. Ethereum following up behind it at $2,110.51, which puts us at a Bitcoin dominance of 56.2%, Ethereum dominance of 10.5%, and gas fees on Ethereum at 0.115 Gwei. Good times, great oldies. We're doing some retracements. We're climbing back. Bitcoin's been Bitcoining. I've been buying. We have updates. Let's go ahead and talk about it. Shout outs to CoinGecko for this wealth of information. I know it's been a couple of weeks, but we are back at it, baby. Let's go. So trending tokens as of this recording, which is Tuesday, last day of March. Shout out to those of you in April. This is being uploaded. It is not an April Fool's. I actually did record. So happy April Fool's. Welcome to April. 15 months left. The march continues to freedom. What can I say? Let's go. At number 1, we have Siren. At number 2, we have Edge X. At number 3, we have Bitcoin. I mean, I'm really happy that Bitcoin still, people are still looking, probably trying to figure out what's going on every time we have a sell-off. People are like, what's happening? It's the end of the world. But, it is what it is. So moving right along to the top 5 gainers and losers. Now, we're going to start off with the gainers list, as always. And it is going to be me hoping that you guys are on this list because we got a big fish in the pond today. Because everybody wants to be on the winners list. You want to bask in the glory at least once. Let's go ahead and jump right on into it. At number 1, we have it rank 675. Edge with a gain of, I gotta throw a round of applause on for this. With a gain of 468% in the last 24 hours. That is amazing. Whew. Somebody got a bag. Very low volume though, so I hope that you can get out if you're pulling some profits. At number 2, we have it ranked 213, Quantum Resistant Ledger, with a gain of 54.5% in the last 24 hours. At number 3, we have it ranked 445, Stake Stone, with a gain of 49% in the last 24 hours. At number 4, we have it ranked 767, Not in Employment, Education, or Training, with a gain of 40.4% in the last 24 hours. At number 5, we have at rank 639, Colonel Dow, with a gain of 39.6% in the last 24 hours. Moving on to the top 5 losers in the last 24 hours. I hope you don't end up on this list unless you fall into one of these 2 following categories. Category number 1, you are looking to get in position on a token, and that token happens to have a little bit of a pullback. Not only does it have a pullback, but the fundamentals have not fundamentally changed. Still a good buy. For some odd reason, they're giving you an opportunity and you can jump right on in with that tasty dip. Scenario number 2, you're dollar cost averaging actively into a project and they're having a slight pullback. The market's scared, but you're not, because nothing's fundamentally changed in the project. It's not a rug pull. It's not going away. It's still got all sorts of great news, kind of like when Bitcoin dips. And you get to buy a little bit extra because the price has come down, thus giving you an opportunity to drag your cost average down while everyone is running in fear and there's blood in the streets. You are out there buying. That's option number 2. Good God, I feel like I'm going to have to sneeze here, but we're not quite there yet. At number 1, we have at rank 109, Siren, with a loss of 67.4%. At number 2, we have at rank 763, Perle, with a loss of 20.9%. At number 3, we have at rank 367, Audiera, with a loss of 16.8%. At number 4, we have at rank 692, Bedrock, with a loss of 16.9%. At number 5, rounding out the top 5 losers list and closing out this segment of the show, we have at rank 432, Sisic, with a loss of 15.6% in the last 24 hours. Moving right on along, we are going to... Oh, goodness. Hold on a second. Let's do this. Hold on a second. New window, what are you doing to me? Oh, never mind. All right. Oh. Okay. There we go. There we go. We'll do that. Jumping on over. Hold on. This. Oh, never mind. That's the old portfolio. Hold up a second. Gotta go. The reserves. That's the updated one. Boom. Jumping on over into the reserves. We've had a few buys at present. In the last 24 hours, we're up 1.6%. Yay. Overall, we're down 26.4%. Now, obviously, this isn't everything that I hold, but this is everything that I bought since last year with a continuing scale. We're below 30%. You know, you got to take those drawdowns. If you don't go through the bear markets, you're not deserving of the bull markets. It's that simple, people. But we are back up above $7,000. Obviously, we've made some buys. We've taken some loans. Definitely check out the financial updates coming up next week. We're going to go over that. But we ended out this month with little bit of a sprint in my personal financial situation. Obviously, we'll talk about that on the financial update. But we closed out April with a total cash infusions, including today, which doesn't get deployed until the beginning of April. But since this is the last day of March, we finished this month, including the funds that hit today, pulling $23,000 into our ecosystem, which I'm going to give myself a round of applause for that, because not only did we in and put it directly to work because we have a financial system, we have a solid running financial machine. So now when all money comes in, I know exactly what to do with it. So, you know, we're going to be rounding out the last of these buys. I'm actually, you know what? This hot 5 that I got coming in, I might be sitting on that a little bit. I might round out a couple of positions, but I might put a little bit in the dry powder pool just in case. Cause we've got some stuff coming up that, you know, is going to be worthwhile. So let's go ahead and jump into the conversation so you guys can watch me itch my nose. I'm going to make myself a little bit bigger here. Go that route. Oh, I don't want to be that big. Wait a second. Let's go. Nah, I don't want to be that big either. Yeah, that's the one that I want. We'll keep this up. We're gonna do. So first off, I want to talk about the market because I've been trying to do this every episode when I get up here, just to add some value so we can look at what's going on right now. The key levels that we're watching. We keep bouncing. We're in this really tight window between $70,000 and $60,000, basically bouncing in it. We went up a little bit, hit 74, beat my chest a little bit, then we dropped back down. That window, we've got to fight our way back up above 74. But the key levels that we're looking at right now, the spot levels, we're obviously at about 60, 65 to 68. That's the range that we're in. The drawdown, we're still 46% below the October 25th all-time high of 126,000 to 128,000, putting us in deep bear market territory by fiat metrics. Now, I'm giving these numbers from the context of someone who is following a Bitcoin standard, which means that I'm not worried about these numbers. I'm giving them for those of you who, this is content for you guys. But it's also good to have a strategy and be able to reinforce where I'm buying at. So we are in bear territory. I'm not even going to say that we're not. I'm counting this as the bear market for me. Do I think we're going to 40? Not really. Could we? Absolutely. If we do, I'll be dedicating 50% of my check to it. It's not really that big a deal to me. As long as there's income coming in, whatever. The key levels we're watching is the immediate floor of 65,000 to 66,000. That's where the floor is, and then we have a retest of 63 to 65 if we break below that. 60 to 61 is the macro line in the sand based on the 200-week moving average and realized price cluster. As long as this holds, the long-term bull case remains structurally intact. That's what the bears don't want to talk about. It's fine. I don't care. I buy either way. Resistance levels. We're looking at 68, 69,000 as the near-term ceiling. Obviously, we are at 60. We're below 68.5 right now. We're in that ceiling window. 70 to 71,000 is a psychological level. Losing this repeatedly keeps the trend firmly on the bearish side for you daily traders. I get it. I don't trade. We're going to talk about that in a second. 75K plus is the former, now heavy resistance territory. A weekly close above this would signal a trend reversal. That put us in trend reversal territory. That's what we want so that all the short-term bears can shut their face. Macro sentiment. Let's talk about it. The fear and greed index, we're still in extreme fear. That's the reason I have no problems buying. I'm buying as much amplified Bitcoin exposure as possible. I've converted the income portfolio as much as possible. I'm buying spot Bitcoin as much as possible. And for the question of why wouldn't you just buy all Bitcoin? Well, I live out of my brokerage account. I don't have enough funds to currently live out of Bitcoin, nor would I have a way to self-perpetuate me living out of Bitcoin, which would mean that I would still have to go to work. And I don't want to still have to go to work. I mean, you can still have to go to work and you can be a purist and you can do whatever you want that works within your system. I have a system that's going to be self-perpetuating here before too long. We've got 15 months left at most, and we are chiseling off the back end of that actively. Every 2 weeks when that W2 pay comes in, straight into the brokerage. We're staying fully invested. Straight into Bitcoin, staying fully invested. I pay the bills out of the brokerage account. It is what it is. I'm doing what works for me. Not every person's financial situation is the same. So not every person gets to be a purist. I didn't start off rich. I don't have anyone helping me. So I had to figure out a way for me to get out of the rat race, for me to get out of the matrix. My back hurts sometimes. My knee hurts. Like, I actually do actual work for a living. And actually, I have done actual work for a living basically my whole life, except for like 1 6-year stint when I worked in mental health. I had a nice desk. And my back hurt then too because I was sitting down too much. Unfortunately, I moved on from that so that I don't look dysgenic like most of you. So we're going to, like, you know, you got to do what you got to do that works. This is what's working for me. This is what's giving me a light at the end of the tunnel. And if what you're doing works, then please, I love to debate finance because it's just math. The only thing to argue about is efficiency and efficacy. And what I've got going is really efficient for my scenario. So, we've got obviously geopolitical tensions with oil spiking above 105 are keeping the risk asset shaky. Unfortunately, Bitcoin is being traded by the wider market. For those of the population and the majority of people do not understand what Bitcoin is. They're trading it like a risk asset. It's high liquidity, so a lot of places that are not able to just call on bank credit right now because of how risky the international market is are having to liquidate assets. It just is what it is. That's good for me. That's good for the Bitcoin treasuries that are not having to liquidate their assets. One man's loss is another man's opportunity. And that's just the way that we're looking at it. Like I see this as financial warfare. To the victor goes the spoils. So my job is to get as much Bitcoin exposure, as much spot Bitcoin, and as much income generation as I can while paying off this debt. Because to be honest, this isn't the time to have non-asset backed debt. We're doing our last transition, and this financial system that I have set up, we figured I figured out, like, running the math, having some crazy thoughts, testing some stuff, that maybe we just don't pay off the debt immediately and build up our cash base and pay it off with the brokers like I'm paying off everything else. So we're going to do that. Because then after it's paid off, I still have the machine. We also have one more important thing that's getting ready to start that kind of, and I'm not necessarily super concerned, but I'm definitely going to be holding back probably $1,000 or so just to see what happens. I think that's what I'm going to do, is I'm going to hold back a little bit of money to see what happens over this next few weeks, because the market is also getting ready to digest the FTX creditor redistribution, which is around $2.2 billion, which it started today. How this affects us, it could introduce both supply overhang and fresh fiat liquidity, depending on how creditors recycle proceeds. So they could go either way, but I'm probably going to hold $1,000 back, just in case dip buying money, just to see where we end up, because I don't want to be in a position where I rush and deploy. Because obviously, I need to get this money into the market as soon as possible, because it's a loan, right? We're supposed to be consolidating debt, and we need to expand the capital base and also be able to buy some stuff. But I also do not want to just rush it in. So we're going to go over this first week going into April. We'll probably do the final infusion on the 10th of whatever I hold back, probably about $1,000, $1,500, hot 15, enough to make a little bit of a difference if we start seeing some downturn. But I don't want to miss that. And I'm notorious about just dumping everything in the market immediately and just letting the dice roll. And I've tried to do that a little bit slower this time. So the $18,000, the initial amount, we filtered that in slower, is over a couple of weeks, last 2 weeks of the month. That's not bad for me. And I think I can do another couple of weeks. The majority of this hot 5 that I just got, we're going to do that. the way that I'm looking at this and the way that I'm playing the game, because all I can talk about is from my perspective. This is financial entertainment. This is not financial advice. Obviously, this is my financial journey. The way that I'm looking at it, for me, everything under 70, I'm looking at it's just accumulation mode for me. When we dip down towards 60, I accumulate more. But sub 70, every dollar cost average, I have no problem buying spot Bitcoin. I have no problem getting amplified Bitcoin exposure, and I allocate an additional amount to that. That's the way that I'm looking at it. And the reason being, to the topic of the video about why I don't trade, and we're going to close out on that. So I will tell you all straight up, 100%. Everybody who trades is better than me because I don't trade. I try not to trade. What I do is I manage and allocate capital. I manage cash flow. I am a financial strategist. I do not think that I'm a good trader. I think I'm a great wealth manager. I think I'm a good financial strategist. That's the game that I've decided to play because I work in a field where I only work with millionaires and up. Few billionaires here and there, mostly millionaires, multimillionaires. And me personally, I've never seen a wealthy trader of anything. I've seen wealthy people who trade for fun, for funsies. I've never seen someone who was like, yo, how'd you get all this? And they were like, you know what I did? I traded. I only see them on YouTube, literally. And I'm in a field with all the rich people. So maybe the traders don't live where I live. I live in the Midwest, and maybe we're too far away from the market and like your trades don't execute as fast, but or something. I don't know. But I know zero people that are like, yeah, I'm a trader. I trade. I day trade. That's what people do as a hobby. I knew one day trader, his wife made all the money and he needed something to do while he was at home. Stay-at-home daddy. Playing in the market, his wife made all the money. So me personally, I'm being fortunate enough to exist in a space where I get to see what the other side does. I get to see what the 1% are doing, how they're navigating, what they're building. Trading was never a way for me to get out. Originally, I was trying to do the boomer playbook, but just adding in Bitcoin. So I was going to get a stack of Bitcoin and then sell it off slow. And then hopefully I don't run out of Bitcoin before I die. And then I started understanding how money works. And like, once you understand how money works and the game that we're in and the board that we're on, trading is ridiculous. Like it just doesn't make sense to me. It's just paying extra taxes to look like you did something so that you can post your wins online. My wins specifically are when my distributions come in that are now over my take-home pay. Because I don't have to do anything. It's like a couple hours of work a week, if that, in the Porta-John on lunch before I take my little nappy nap and have a little snack. It's way more efficient, and I'm building wealth. And the other thing that you do is I only have to worry about taxes on the distributions, which are less than taxes from your W-2 paycheck. How you make your money matters. The other thing that's interesting about this, the mindset of being fully invested and living out of my brokerage and having Bitcoin as a collateral asset, just like my house, is you don't pay taxes on loans. So $23,000 I just had come in that I deployed, no taxes, all loans. The income machine pays the loans back. My W-2 doesn't pay that back. W-2 goes directly into my brokerage, directly into Bitcoin. There's no point in trading for me because I can go to sleep. I wake up every Tuesday and Thursday. I get a check in my brokerage. If I need cash, I take it out of my brokerage and move it into my bank account and I pay my bills. And now I can do that with Bitcoin. That was the last thing, the hot 5 I just got. Game on. And as we all know, one of the standards that we have over here is my Bitcoin standard is we take 10% of all loans and they either go into Bitcoin or into amplified Bitcoin. And now my long-term holdings, which has is able to be margined on its own, we're running margin in there too. And as I pay the margin down, I redeploy it to get another position. So we're growing that pool also, which also has a cash value amount that I am allowed to pull that I can just have as needed. And we're about to get real strategic with that too. But when you're building and working from a collateral cash flow basis, trading's cool and all. It's just a lot more work than the system that I have set up. Traders generally don't have a system that survives once their account blows up. Traders generally, I mean, I know a couple of traders that are real dialed in that are doing both ends, and I get it. I'm like, yo, okay, you're using this and running it like a business, just like what I run my finances like. It's just one of your engines is the trading account. So you trading. And I always tell people, it's one of the things that I always say, because like I've realized that I can't go back and forth with people who trade because like they're not speaking anywhere close to the same language, and they're nowhere close to the same outcome, except for the couple that I've talked to that I'm like, yo, like on the back end offline, when they're not trying to be right in front of everybody, are going, oh, okay, yeah, I'm building this over here too. And it's like, okay, so like you're using the trading as an engine to generate income. Like that's just like a side hustle then. Like, you're like, yeah, like, okay, like I get that. Most people who trade want to be that guy who trade. They want to be the next Wall Street Trapper. And I'm like, Wall Street Trapper is real good at what he does, but he also says is on the back end building something. He's also got the long-term portfolio. He actually, watching his content, because like I never really wanted to trade, but like, you know, following his trades, like I might be able to do that. Like it was like replicate what you do. Like you're gonna give the sauce, like just go ahead and do what you're doing. And we might get to that point one day for funsies. But one of the things that he really put me on was having something that's not as volatile as the rest of the portfolio. Because when I first started in high yield, I was to the hilts on everything. On everything. When I first started, it was just a single position with all the money in it. On everything. And, you know, watching his content, seeing how he was rocking, even though I'm not trading, I'm doing 100% focused on income and capital allocation and financial strategy. He was like watching his content. He broke it down in a way that it made sense. And I was like, oh, cash reserve, like you should have some of this in a position that's like not as volatile. So your portfolio isn't flying off a cliff every time the market goes bad. I know I wasn't thinking like that. I come from Bitcoin. I'm like, cool. Like if I need something that's not going to fall off the cliff, it's Bitcoin, but Bitcoin also falls off a cliff. I just got immune to looking at red numbers. Like it was nothing. Like that's, oh, your portfolio is down 20%. It's like, all right. And Bitcoin 30% down. We're 46% off all-time highs. And I've been doing this for a long time. Like I'm just used to red numbers on a level that most people who are in normal traditional finance just can't fathom. And I'm like, well, look at them for a decade and you know, you get to see some really green numbers too. Like that's pretty cool. But I function better in this market because I can just, I guess it's whatever trauma I've experienced in my trading existence, in my existence investing, because I'm not a trader. I completely disassociate from the emotion of it. And so Bitcoin, everybody was checking on me when it was like, are you okay? And I'm like, my cost basis is under $30,000. Yes, I'm fine. Like, I've been doing this for over a decade. So now when Bitcoin's red, it's real easy for me to just go on autopilot and be like, click buy. Like, cool, just buy some more. The money come in, cool, buy some more. And now that I'm fully invested, I have income coming in throughout the week. So like when I look at my portfolio and it's like, oh, numbers are red, I'm like, what's my collateral basis look like? Do I still have access to about $10,000 cash if I need it? Great. I get the dividends are going to come in and pay that down. Oh, I need to buy some more. It's payday. Oh, I got some more money come in. Need to buy some more. How much do I have in my cash reserve pool that I can deploy out of the margin? Okay, buy some more. It's not the end of the world for me because there's money flowing. There's stuff happening. Every time I pull out of my margin account, I buy a little bit of Bitcoin or amplified Bitcoin exposure, whatever. End of the month, coming up on the 1st, I get to move an additional 500 into my collateral basis to gain some interest just in case Bitcoin price drops. So I can put it over my collateral account over on Nexo. I got Bitcoin that I'm borrowing against now. It's set match for me at this point. I just need to buy more Bitcoin. Now all I need is money. I need about another hot 20, and I don't have to go to work anymore. Another hot 20. Actually, I'd say it's another hot 13 because once my brokerage account gets to $60,000, it'll be generating enough income. It'll be, if I was being dumb, it would be to the point to where I wouldn't have to, I could just go ahead and quit. Like if I was emotional and a baby, like a lot of these kids are these days, they're giving up. That would be my out, technically speaking. And honestly, if I didn't have this debt, that would be on the table because like I got places I want to go, things I want to do. I want to be out here moving, grooving, gliding, and sliding. And I'm just not able to do that right now because I got this debt and I'm going to pay it back. But like now I just took another asset infused debts I can rock with all day because those count as flywheels. So now we're in the flywheel phase. Starting April, that debt's getting buzzsawed. We're gonna be going at it. We're going after it. So that's what I got. That's why I don't trade. That's like my little hot take on it. Like me personally, I'd rather just manage money and have income come in and have it be self-perpetuating so I can do that forever without having to sit in front of a screen all day being in the market. Because once the markets go 24 hours, a lot of these day traders, 24 hours, that's a whole lot of time for your trades to go bad. That's all I'm saying. That's all I'm saying. The game's going to be different. Then your guys are going to be doing what the crypto dudes were doing. Oh, my account got nuked while I was sleeping. I've done that. It's not fun. It is not fun. Trying to make some moves, throwing in some levered longs and stuff. And now you got the market going 24 hours a day because once the NASDAQ and the S&P and the stock market is tokenized and is trading 24 hours a day, Bitcoin ain't going to be safe at all. It's going to be go time because people are going to be liquidating and having to make moves at all hours of the day. AI is going to be making moves at all hours of the day because those markets are still going to be open. It's going to be a totally different dynamic. And honestly, I'm not absolved from it because a lot of my stuff that I make money off of, because I don't trade, I pay people to trade for me. That's the reason I use the high yield ETFs. That's going to be a totally different dynamic once that goes 24 hours for that as well. So like, I'm going to have to make some adjustments. I'm going to have to reformulate my entire system because who knows what that's going to do to, those markets, because that's going to be 24 hours too. So all those covered call strategies and all that stuff, all those zero DTE strategies, like what happens when the market don't turn off? Like now you gotta put them on specific hours or something. Like what's the market dynamic? What's the flow going to look like? Because things are going to be fluctuating at all hours of the day. So, it's going to be interesting. The world evolves and we got to evolve with it. I think I'm pretty good at pivoting, rolling with the punches and whatnot. And, right now this works, but obviously like I would like to have a good chunk of this debt knocked out, if not all of it, before we have to make these adjustments, because like that's also going to be a game changer. That's going to be different. So until next week, people, hopefully, depending on busyness or whatever, it's your boy, Reckless Ray Dinero. This has been another crypto portfolio update. The channel is Future Financial Strategies, and I am out of here. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.